This is 24.7, Chapter 24, From Contract to Completion. General intro to statements of adjustments. Statements of adjustments are a convenient method of providing the parties with detailed information relating to the balance due from one, the buyer, and the balance due to the other, the seller. On a buyer's statement, the conveyancer is calculating the amount of cash the buyer must be able to provide to the conveyancer in order to complete the transaction. On the seller's statement, the conveyancer is calculating the amount of cash the seller will receive from the conveyancer on completion. The amounts due from and due to are not the same. It's important to treat each statement separately. The buyer's statement and the seller's statement are not comprised of identical information. To calculate the balance due from the buyer, the balance due to complete, and the balance due to the seller, the cash proceeds of sale, conveyancers will place certain financial amounts or items in either a debit or a credit column on the statement of adjustment. A credit is an amount that has already been paid or is owing to the party, while a debit is an amount that will have to be paid upon completion. On the statements of adjustment, the terms debit and credit are used in a manner that is different from their use in accounting. So there's a figure 24.2 here. It says debits versus credits. Debit. Amounts owed by the party increases the cash needed by the... Okay, let me compare them. Debit versus credit. Debit, amounts owed by the party. Credit, amounts owed to or already paid by the party. Debit increases the cash needed by the buyer to complete the sale. A credit reduces the cash needed by the buyer to complete the sale. A debit decreases the cash the seller will receive on closing, and credit increases the cash the seller will receive on closing. Debit, burden to the party's cash position for closing. Credit, benefit to the party's cash position for closing. And so there's a note underneath that says, in accounting, the terms debit and credit are used in a different manner. Now here's an example. A buyer and seller have signed a contract of purchase and sale for a property at a price of $100,000. The buyer is paid a $10,000 deposit being held in the buyer's conveyancer's trust account. The conveyancing fees to be paid by the buyer will be $550. The real estate commission payable by the seller is 5% of the purchase price. Okay, that's the end of the example. Now, the buyer's statement of adjustments would be as follows. Buyer's statements of adjustments. So here's a graph. Purchase price. In the left hand, there's debits for 100 grand and nothing in the credits. And then for the deposit paid in the debits there, okay, let's get this straight here. So the purchase price, left hand, there's debits, 100,000. So that is that's the buyer. So basically, this is amount owed by the buyer, by the party, which is the buyer. Okay. And yeah, so this is owed by, this is what the buyer has to pay. And then we got the deposit paid. There's nothing there in the debit column, but there is something in the credit column on the right that is 10 grand. So this is amount that has already been paid by the party. That's already been paid by the buyer. Then the third thing we have is conveyancing fees. So in the left column, debits, we have $550 because this is something that is owed by the party, by the buyer. They haven't paid it yet. So there's nothing in the credits column there on the right-hand side. And then the fourth line, we have balance due to complete. On the left side, the debits column, there's nothing. It's empty. But on the credit side, because this is amount owed to or already paid by the party, balance due to complete is $90,550. So that is basically this is what $90,550. So, reduces the cash needed by the buyer to complete the sale. So basically, they got to provide that amount of money. So, the total on the left column, the debits, we've got $100,550 because we added the purchase price and the conveyancing fee. So that's $100,550. On the credit side, we have $100,550 also because we're matching the debits. I don't know. So notes, number one, the two columns represent debits, i.e. amounts owing by the buyer. That means the buyer has to pay. And credits, for example, amounts which the buyer has already paid or will receive from the other party. Okay, they're due to him. The purchase price which the buyer owes is a debit. The deposit which the buyer has already paid is a credit. Number two, the conveyancing fees which the buyer normally pays are debit that increases the amount the buyer owes. Okay, so conveyancing fees, they are in debits because they're still owing. All right. This amount does not appear on the seller's statement. However, conveyancing fees, lawyer fees, etc., surveys, they don't appear on the seller's statement. However, if the seller has engaged a lawyer or notary, the seller may have a separate debit for fees charged by that lawyer or notary. And then note 3, the debits and the credits columns on any single any single statement of adjustments should always total the same amount. Okay, so that's why we've got in both columns the totals are the same. The item shown as balance due to complete, which is in our case here, it's on the right hand column, the credits column, is really the total debits minus the total credits. So it's basically debits column total minus the credits column total. And while shown under the heading credits, it's just the result of subtracting the total credits, excluding the balance due to complete, from the total debits, okay? So we just put it there in the credits, but I guess it's really not a credit. This amount does not appear on the seller's statement. Okay, so that's a balance due to complete, and the formula is balance due to complete is the total debits minus the total credits. All right, now let's take a look at the seller's statement of adjustments. On the seller's statements of adjustments, we've got a graph here. So we've got the first line is sales price. On the left column, it's empty. The debits column, it's empty. On the right column, credits, it's got $100,000. Then the second line, we have real estate commission. So the seller has to pay this, so that's in the debit column, the left-hand column, $5,000. Nothing in the credit column on the right-hand side. Then the third line, we have cash proceeds of the sale. So we've got, in the debit column on the left, $95,000. On the right-hand column, we have, it's empty. Credit column, it's empty. So now the totals. The debits, the $5,000 real estate commission and the $95,000 cash proceeds of sale equal to a total of $100,000. And then if you take a look at the credit side, you've got sale price, which is on the credit side. So that comes down as the total, $100,000. Notes. Number one, the cash proceeds of sale due to the seller on completion, $95,000, is different from the balance due from the buyer on completion, which is $90,550. $90,550. And why is that? Why is that? I'm just going to make a little note here. Because what? Because buyer has already paid $10,000 deposit. Okay, so instead of paying $100,000, they've already paid $10,000, so they're basically owing only 90 grand, but then we got an extra 550 plus the 550 conveyancing fees they still owe. All right, note 2, the sale price becomes a credit on the seller's statement of adjustments because it is an amount owing to the seller. So that's a credit. The commission is a debit because it is an amount owing by the seller, so the seller has to pay it. So basically, debit column is what the person owes, and the credit column is what they own. So we got owe, own for credit. The commission, because it is paid by the seller only, does not appear on the buyer's statement. Now, question 3. Many students wonder why the deposit is not reflected on the seller's statement. Remember that the facts stated that the deposit was in the trust account of the buyer's conveyancer. Unless the seller had actually received the deposit, which happens sometimes, it will not affect the amount of cash they will expect on completion. In other words, if the price is 100 grand and the buyer pays a deposit of 10 grand directly to the seller can only expect a balance of 90 grand. In this case, the 10 grand would appear as a debit on the seller's statement. Okay, and that happens sometimes. However, where the deposit is held by a third party, for example, the real estate brokerage, as is almost always the case, in the real estate brokerage's trust account, it will not affect the amount of cash the seller expects to receive on completion. So I'm finished that graph. Now it says here the statements of adjustments contain what can be considered financial information about how the real estate transaction is being financed. Sometimes the statements of adjustments contain accompanying notes about the closing procedure as well as the explanation of the method used to calculate the more complicated adjustments. They may also contain directions as to payment of monies to the seller and exclusions of liability for the conveyancer, relying on information provided by lenders or public authorities. Okay, so maybe they'll put a disclaimer in case, some of the info that the lender provides or the public authority provides which may ultimately prove to be false. So they have a disclaimer in case that happens. The statements would not include the notes we have shown, as they are explanations solely for the benefit of the students enrolled in this course. Yeah, of course. Right. The following is a discussion of a number of the more common items found on statements of adjustments. Keep in mind that in your practice, you may encounter other items on these statements that have not been discussed in this chapter. This is due to the fact that real estate transactions can be structured in many different ways. One example is trades of real or personal property. The parties in a real estate transaction may agree that the buyer will pay for part of the purchase price with his or her own real property or an item of personal property, for example, an automobile or a piece of jewelry. In this case, the conveyancer would make the appropriate entries in the statements of adjustment. For example, if a car was being transferred to the seller as partial payment, the agreed upon value of the car would appear as a debit on the seller's statement and a credit on the buyer's statement. Okay? Because the seller, why is it a debit? Because it's owed. And it's a credit on the buyer's statement because it's owned. It's basically they're getting it. Items on statements. Some of the more common items that may appear on the statements include deposit, commission, mortgages, property taxes, legal fees, and taxes such as the property transfer tax. These are discussed below. Deposit. A deposit is normally paid by the buyer to the buyer's brokerage when the offer to purchase is made or when the subjects, quote unquote, are removed. Sometimes a small deposit is paid when the offer is made, and is subsequently increased on subject removal. If the offer is accepted, the deposit is regarded as a sum of money representing part of the purchase price, which the buyer has paid in advance. On the buyer's statement, the amount of the deposit will be reflected as a credit, thereby reducing the balance due from the buyer to complete. Okay, so the buyer will put it as a credit. That means something they own. If indeed is paid directly to the buyer. That's my note there. However, the deposit paid to the buyer's brokerage will not appear on the seller's statement. On completion, the deposit would theoretically be paid to the seller by the brokerage holding the deposit as part of the cash proceeds of sale. In practice, the brokerage holding the deposit will apply the amount of the deposit held to the commission owing, but that is because the seller has approved this in the listing agreement. So you see clause 6A of the multiple listing contract, which can be found at legal documents point 6, and in the seller's statement of adjustments. If the deposit is paid by the buyer directly to the seller, the amount of the deposit will appear as a credit to the buyer and a debit to the seller, because it will reduce the cash proceeds to be received by the seller upon completion. Brokerage's commission. The brokerage's commission, which is normally paid by the seller, would appear as a debit to the seller, thereby reducing the amount of cash proceeds of sale due to the seller on the seller's statement. The buyer's statement would not be affected. Many people confuse the deposit with the commission, because in fact the deposit held by the brokerage is used to pay the commission. However, the two items are completely separate. The deposit is paid by the buyer pursuant to the contract and is usually held by the brokerage acting for the buyer. That brokerage holds the deposit as stakeholder. That means the brokerage holds the deposit for the benefit of both the seller and the buyer. Separate from any deposit paid is the liability of the seller to pay the brokerage its commission. If the seller and buyer have, for example, entered into a legally enforceable contract and triggered the obligation of the seller to pay commission pursuant to clause 5A point small Roman numeral 1 of the standard listing contract, which can be found at legal documents point 6, then the commission has been earned by the brokerage. However, clause 5B of the standard listing contract provides that the commission is not payable until the completion date. Then, under clause 6A of the standard listing contract, the seller authorizes the brokerage to retain the commission due from the deposit. The brokerage can only do that once the sale has completed. That is because once completion occurs, the seller has transferred title and the buyer has paid the purchase monies, the deposit is no longer stakeholder money. The buyer has title and therefore no claim to the deposit. The seller has transferred title and is therefore entitled to the purchase monies. The deposit is now the seller's money, and the brokerage can use that money to pay itself commission. If the commission payable is greater than the deposit held by the brokerage, then the buyer's conveyancer will pay the brokerage an amount equal to the difference between the deposit and the actual commission. The seller will have been debited with the full amount of the commission. In most cases, if the commission is less than the deposit, the brokerage will pay the excess deposit to the buyer's conveyancer, who will then pay the listing brokerage its commission as part of its closing procedures. The contract contemplates the forwarding of excess funds to the conveyancer on an undertaking to hold the funds pursuant to the provisions of the Real Estate Services Act. Occasionally, the brokerage will forward the excess to the seller's lawyer directly. If this is the case, the conveyancer will make a note on the seller's statements of adjustments how much the brokerage rather than the conveyancer owes the seller, i.e. the excess of deposit over commission.